gentlemen, why hasn't real estate crashed in 2020? We're going to try and answer those questions and figure out, as a value investor, where's the best place to put your money. Let's jump right in this.
Drop it.
Rug that is the real estate market about to get ripped out from under us here in 2020. But let's get into this by starting off this article that I found that says the housing market may not recover in 2020 after the 21% sales crash. And this is so clickbaitery because this is talking about the volume of sales, not the actual prices of the home selling themselves. And I mean, it's expected for the volume to be down. We're locked down here, ladies and gents. But it says if you were skeptical that the CV outbreak would wreak havoc on the U.S. housing market, the latest pending home sale numbers for March 2020 should be enough proof to change your mind. According to the National Association of Realtors, the NAR latest report, the pending home sales index, the PHSI, a lot of acronyms here, basically show a whopping 20.8% annually, which is the decline. The NAR points out that the PHSI is a forward-looking indicator that is based on contracts signings. Actual contract signings dropped 16.3% year over year in March. But despite these red flags, NAR chief economist Lawrence Yon believes that the CV-introduced housing market downturn will only be temporary. Isn't it horribly challenging as an investor sitting on the fence looking at data and then listening to economists say, look, it's temporary. It's going to be fine. We're going to kind of analyze that farther. But how about this? Let's start by taking a look at actual real estate sales across the Western world, starting here in Canada, and then we'll look across some of the U.S. states there, ladies and gents. So these are home listings that have sold over the last few days. Some of them have sold for, at pricing par, and some are starting to sell under the listing price. For example, guys, we can see here that the last price listed for this guy looks like a condo is $300,000, sold for $277,000. Here's one that sold for $578,000, listed at $595,000. I mean, the list goes on and on here. Here's one listed for $550,000, sold just above asking. It is a really scary time to be trying to flip a house in this property. But let's move into Las Vegas condo market, which is also down quite a healthy little bit. We can see the 2020 numbers here, guys. Over 16 homes. We're looking at a drop by about, 30,000 on average. This overall is something that I thought would have got hit the hardest, considering if you know anything about Las Vegas, it is purely usually tourist based, and even a lot of people that go to work there that rent homes or buy homes, they're usually not permanent. And even in Florida here, ladies and gents, we're starting to see a very slow pullback on homes, which looks really awesome because I mean, if I could buy a nice house in Florida for $175,000 compared to these $500,000 million homes up in Toronto, I mean, I could outright afford to buy that baby, but nonetheless, still stuck here in Canada. So the major question here is why hasn't real estate crashed, and is it going to crash? The primary reason everything is being propped up is thanks to good old what would have been called quantitative easing back in 2008. Today, they're just the emergency benefit relief plans the government is offering. So, I mean, if you're getting those checks from the government here in Canada or the US, I mean, that is one of the biggest reasons everybody is still floating through this. And the reason these people are simply able to pay their rents is due to these benefits. And then on top of that, we are sitting in a world with the lowest interest rate environment since the 2008 financial crisis. We're also sitting in a world where a lot of people are getting deferral on their mortgages and rental payments due. So with the combination of all of that, we're kind of coasting through this temporary shutdown. And honestly, the real question is going to come into play when all of this free money and all of these deferrals run out. And that is coming up fairly quick. July is pretty much the cutoff for all emergency benefit relief plans here in Canada and I believe in the US. And we don't start seeing an increase in volumes and unemployment numbers going down. I mean, there is a real good chance that the real estate market is going to get impacted on a much more major level. Now, do I think that's going to happen? Personally, no, because the government really does a good job at going out of their way to try and prevent this stuff from happening. Do I think there's going to be a slowdown and even a continued decline in housing prices? Yeah, maybe we could see a 20-30% correction overall. I think that would actually be healthy, especially here in the Canadian housing market where things are just flying through the roof. It would allow a lot of new people that are just kind of getting into the workforce that aren't really used to watching crashes happen. It's probably going to give them an opportunity to buy homes. So where should you be looking if you want to buy a house right now? What should you be doing? And I'm going to have to follow Cardone Baloney. Grant Cardone had some really good advice. I suggest you check out his more recent video.
If you are going to get rich in your lifetimes, it will not be because you worked hard. It will not be because you have talent. It will not be because of those two things. It will be because you invested. You will either make great investments or you will make bad investments. If you do neither, you have no shot at the American dream. They say that 30% of homes priced at $200,000 or less have been listed at a median discount of 6%. So the guy that had a house available on the market for $200,000, that's not a lot of house anymore. What kind of house did that buy? Okay, that means he just discounted at $12,000. Watch, he's going to have to pay the brokers $12,000. So it's going to be a 6% discount, a 6% commission. So he's walking away with what, 174 on that house, 176?
And I don't always agree with Grant Cardone, but I think you got to wait till about October here, ladies and gents, because we just got to see the full fallout and the people that are going to be in real pain. Not saying you can't go out and find an incredible deal out there now. If you've got the money, I'm sure you could bargain with some desperate people that need to get out from under their mortgages. But in the same notion, where is the real estate deals? And this is something Grant Cardone will not talk about, but it is something I'm going to talk about, and that is the real estate investment trust market. Because unlike actual real estate that can only be correlated to the surrounding real estate in that area, REITs are kind of exposed to the general public markets, and the public markets can actually decide what REITs and stocks are generally worth. And right now, the public market completely put REITs in the trash. A lot of REITs right now are trading down 40-50% from their all-time highs, which is something that can't be said for individual houses right now. And I'm just going to show you a few examples real quick because you do have to be careful. We're starting to finally see some pain within the real estate investment trust world with H&R here in Canada. A very large real estate investment trust just cut its dividend by 50%. So you're going to have to do your homework here just as much you would have to do it if you were buying an individual house. But the one stock that I look at just to show you an example of this big disconnect between physical real estate and real estate investment trust, here is one of my favorite stocks. I'm talking about RioCan. It's Canada's largest real estate investment trust, down about 47% with a PE of 6.5 and a dividend yield of 9.94. And there's no way you're going to buy an individual house right now that's going to cash flow you 9.94% after the mortgage payments. But let's just take a look at the underlying assets here. We can see right now, as of this moment, they have $15 billion under management, and we can take a look at their liabilities is only just about $7 billion. That means they're sitting on almost $8 billion in underlying assets. So if they liquidated all their real estate, now this could fluctuate. Obviously, if real estate prices do crash, do come down, that will get reflected in those asset prices. But in the same heartbeat, guys, RioCan's only worth $4.6 billion. That means if it's worth about $8 billion just in the underlying assets, you're getting a 50% discount. Now, I'm not going to ream you out on their tenants and why I like this stock so much, but I feel like the pain has been priced in, even though that might not be max pain. Now, obviously, we don't know what the next 6 to 12 months is going to look like. I'm going to continue to be an optimist, but I'm also going to tell you to approach this stuff cautiously. But if you're looking for real deals in the market right now, there's only two ways to achieve it. And that is either by really digging down into these real estate investment trusts, finding the ones that are severely undervalued and loading the boat, or on the other end, building up a nice stack of cash, constantly picking up the phone and looking at real estate deals and finding that person that is very desperate to maybe get rid of a multi-family duplex or triplex that you can kind of pull the rug out from under them, get a good 20 or 30% discount, and then hopefully your cash flows are going to be well above what you could have expected to get going into the beginning of this year. Overall, just some food for thought, ladies and gentlemen. I'd love to know what you think in that comment section below. What are you doing with real estate? Are you living at home with your parents like me? Are you living in an apartment? Are you struggling to pay your rent? Are you looking for homes? Are you buying real estate investment trusts? I'd love to hear about all of it. So stay cool, stay awesome, and I look forward to chatting to you tomorrow.